Hello everybody, welcome back. So I'm going to just quickly talk to you about what could be known as the everything drop, basically, or the everything crash, or the everything death. Or I don't want to sound like a massive bear, but if anyone remembers this channel, back, it wasn't that long ago, but I was talking about the everything bounce here. It wasn't a very popular video. In fact, I posted it on Reddit and got kind of banned when I went back to a few weeks later to say, can you see how well it's playing out? This was done on the 16th of June, you can see here, 16th of June. What actually happened on the 16th of June, you might ask? Well, I can tell you what. I was talking about the everything bounce, and the everything bounce was the fact that stocks looked like they were reaching their exact lows. Look, on the 16th, let's just go back in time here. This is our daily chart. You can see the 16th on that tick. The 16th, you would have got the absolute low for the everything bounce on the NASDAQ. So far, up 17%. That, again, you can transfer this over to our friend Apple, 26%. Our friend Tesla, to which we bought 42%, and pretty much all stocks. Obviously, this is why it was called the everything bounce, right? It was all sort of, I suppose, a theory that I had about a rotation from commodities to equities and risk assets and stocks and everything like that. And everything. That's why I called it the everything bounce. And at the same time as that, on the 16th, we found a top. So where was our top around here? There we go. So this is where I said oil's very, very toppy. And there we go, straight down into a downtrend. We're still down 15%, but we were down a lot more than that. Wheat as well. These are just two examples of commodities that came crashing down on that exact day that I told everybody to do it. Or should I say the day before. Everything started to move the way that I said. So the everything bounce has been going on now for about 8 weeks, 7 or 8 weeks, and I got the top on the commodities, the bottom on the stocks and indexes, and obviously throughout that I said Bitcoin and altcoins will move through association with traditional markets in this everything bounce. So you might think, well, oh great, yeah, the everything bounce, excellent. Yeah, that goes to what everyone's saying on Twitter now about how everything's looking great. It says, yeah, but the idea is that by buying the bottom, you make the most of the everything bounce. Buying now makes you very, very close to what is a significant downtrend on the NASDAQ. So this is where you'd be thinking of getting out, or at least limiting your exposure to the everything bounce. Like I say, if you get in at the bottom, you can afford to take some profit here and let some more profit ride in the event that we have a breakout. Excellent. But as we see, this is a very significant area where we've been rejected big time, and we have got a descending triangle, which is effectively lower highs and lower lows, aka a downtrend on a weekly or a daily, or whichever way you want to boil it down. So this could mean rejection from here back down to here, and maybe even lower. It doesn't have to happen, but this is the nature of trading, isn't it? You buy low, you sell high. You don't buy high and get wrecked. That's not what you should be doing. So while everybody's super bullish now for whatever reason, the obvious trade, the most profitable trade for stocks, indexes and crypto appears to me to have played out completely as expected. I sound like the bull there. Well, no, not the bull there. The moon. Carl from the moon. Exactly as expected. Played out exactly. I doubt he would have been talking about this, to be fair with you. I think he just wants people to click on the links below. But all I was saying is that, the everything bounce is an everything bounce, and it looks as though everything has bounced. I didn't say it was an everything reversal. I said it was an everything bounce. Now, I'm fine for this to break out for here, and I will certainly let some of my positions ride. I can sustain that, but I would not encourage anybody to be buying anything as we approach this major level. And I'll tell you why. So let's just say next week we get a rejection from here. We come down to the bottom of the range again, 16%. If we break down there, we come down to the pre-pandemic highs, 27.5%. This is the pre-pandemic high. If anyone actually looks at stocks, lots of stocks, even within the NASDAQ, have gone completely wrecked city, and they're not just below the pre-pandemic high, they're below the March crash. This is the NASDAQ giving a false sense of security that it hasn't done that, and it's not come even close to the pre-pandemic high. the pre-pandemic lows, the lows in the middle of the collapse have already been surpassed by people like Netflix and PayPal, and I think even Facebook, I'm not sure exactly, but Wrecked City, basically, the Nasdaq is saying, nah, I'm alright, which is, again, why I was on the everything bounce, I only bought the top 4 of the Nasdaq. You might think, boring, but look, you got to buy into strength. If you want to make some money in this kind of environment, you don't want to be taking unnecessary risk. Anyway, so the everything drop could take us to at least 27% if we get a rejection from here. We know the correlation between Nasdaq and Bitcoin is quite high ever since 2020. So let's just say we got rejected on this 10 exponential here, as we were getting rejected from it at the moment on the weekly. 27% would take us to 18,000. So sweeping, I suppose, this wick low. That's fine. That's no big deal. But that's if it was to just mimic exactly what the Nasdaq does. If we add an extra 30% on that or so, or we move into the 30s, we're talking 15, maybe 14, which would be sweeping the this top over here from 2019, and also a highlighted area of significance that you'll probably have seen floating around Twitter. Probably not recently, but it was around as we were going down. That's all people could think about. It's going down even more. It's going down even more. I'm putting my buy orders in at 2 cents for a Bitcoin. That's what somebody told me to do on Twitter. So no. And now everybody's saying 30k, 40k, full reversal, moon, because, unfortunately, crypto Twitter is very much like a goldfish bowl, and people can only see exactly what's in front of them and reiterate like seen this green candle? It's green. That means it's gone up, which means it's bullish. I'm not trying to rub it in people's faces. I'm just saying, I feel quite, strongly that the everything bounce has played and is almost completely finished, and whether we break out of here or not doesn't really matter. I trade based on risk to reward, and you buy low and you sell high. You sell at or close to resistance. You don't buy it, you sell at it. You buy or close to support, or if like I say, this one was a bit more of a complex breakdown of all markets, really, commodities and even forex and crypto, and everything was all sort of put into one big TA soup that I stirred around and decided that the most likely scenario was going to be a reversal on commodities and stocks, almost like a rotation, like what we see with the Bitcoin dominance chart, which, to be honest with you, I will make another video on that because I feel like that's due to come to an end. And once again, like I say, this is another call that I made pretty accurately as well. We got the 48.7% dominance there, where I said, we're going to get an alt season at this point, and I made a video about, saying this is why I'm buying altcoins today, at 47.8% dominance. And you will see, if you look at this, like the 12th of June, you go back to all your altcoins on any chart across any platform, you will see that it's at that date and at that Bitcoin dominance figure that we found a reversal on altcoins, and they outperformed Bitcoin by at least 50%, some over 100%. Who told you? I told you. Anyway, and now I feel as though that's due to come to an end as well, because as we all know, the Bitcoin dominance chart doesn't like being at 40% dominant. We have horrendous reactions from down here. Anyway, so this does sound a little bit bearish on the market, I have to admit. I know how it sounds, but I suppose that's what it's supposed to be. You don't want to be in altcoins as you approach 40%. You don't want to be in Nasdaq as you approach resistance. You don't want to be particularly overexposed to the crypto market as the Nasdaq comes to visit that area of potential rejection, because the correlation could drag Bitcoin down by over 27%, into the 30s, maybe a little more. Like I say, it doesn't have to happen, but the trade was made 8 weeks ago. The exit points are basically now, right? For me. Doesn't mean that they're for you, but they are for me. And if we continue to go up, and if we break out of this descending triangle for the Nasdaq, then it does offer a chance of a reversal, and we can start to trade what might look like a healthy market again, and that's fine. There'll be more entry points down the line, but for the moment, this very much does look like an exit point, not just for Nasdaq, but for all the stocks through association with what might become an everything dump. So there you go. I expect this video to not be popular whatsoever, but I thought I'd put it out there just to explain to you that, obviously, the time to have bought was 8 weeks ago on the 16th, where everything bounced. The time to start selling, or at least limiting your exposure, is almost now, basically. We've got next week when traditional markets open once again. We will see what kind of reaction we have from these levels. But personally, I think the party is coming to a close, and there might be an after party, and then there might, we might be able to float on up after then, and that's perfectly fine. But this has been and continues to look like a bear market. As far as Bitcoin is concerned, it's still within the cycle, the bear market cycle portion of its 4-year cycle. So you have to really expect it to behave like this until at least September, possibly maybe even up to December. And so limiting exposure to a successful trade over a period of 7 or 8 weeks is what we've done here. Is the right thing to do. It's the right thing to do. Anyway, I'll leave it with you there. Hopefully some people watch this video and just think about it. I'm not asking you to do anything. I'm not your financial advisor. I'm just letting you know that the analysis that I made back on the 16th was pretty good, and it was an epic entry point for everything as everything bounced. But I called it an everything bounce because that's simply what it was. It was never going to be the everything reversal. It may turn into one, but it was always to be treated as the everything bounce, and it's been pretty sweet. Like I say, this last 8 weeks has made more profit than the whole year, and I could sit back and just chill out until the bear market's over. Now that's my trading year done. Really, I don't have to involve myself any further if I didn't want to, but obviously I'm going to because I like my money. All right, but anyway, I'm gonna leave it with you there. But hopefully you'll join the Telegram, join the Patreon, join the Discord, and do all that business. If you want to know more, I'm usually around. It is the summer holidays, so I've got kids to look after as well as making loads of money. Not only joking, but my time is more limited than usual because of summer holidays. But yeah, feel free to join those platforms, and I'll speak to you there. Anyway, thank you. Take it easy.